The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 21st, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I do everything we can to have an extraordinary day. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We get to go figure out what it is they're communicating to you and I. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on it anytime, 877-927-6648. Internationally, 727-445-1044. Let's get this show started on this terrific Thursday. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 245 points. She's trading out at 16,013. S&P is up 26 points, trading at 1886. NASDAQ Composite up 53 points. That's trading at 45.25. Russell's up 10.5 points, trading at 1,009. Gold back $13, trading at $10.93. Just completed a little Gartley buy on its 30-minute time frame chart out there. Silver's back, 10 cents? Trading out at, it's not even 10 cents. That's interesting. In any event, Light Sweet Crude, that's back $1.91. Lead the charge here to the upside individual stock-wise. You've got Priceline up $25, about 2 3/10%. Google's up 18. That's 2.5%. Amazon is up $14. AutoZone up 8. Concho Resources up 8. Chipotle up 7. To the downside, you've got Alkermes PLC down $25, 42%. Ouch, that's a stinger. You've got Ngility Holdings. Don't know if I butchered that name, but it's down 47%. That's where the real butchering is going on. That's off $13. So let's go figure out where these markets are going to. And right now, it's actually kind of cool because there's a lot of clarity here with regard to what the market has been doing during this lunch hour before we actually came on the air. Let's take a look at two. We're going to look at the S&P futures contract. We're going to take a look at the 120-minute time frame chart. And here you can see, if you watch us on TigerTV, I hope that you are, we've got a little green line, diagonal line. That's really the trend line that has contained price inside of the S&P futures contract. And we can see right now that just as we were coming on the air, that candle session was, it was at noon time. That candle session was completed, and price just poked its head above the trend line. Now, we saw a poke above the head of the trend line back here on January 19th, about 6 in the morning to about 8 a.m. So in that area, now that was running into another level of resistance, 1909.50. That's still going to be another spot to be watching. But what's really cool about this, we're going to go from the 120-minute time frame chart out here. And when you break a trend line by moving sideways, you and I know we never get excited about that. But what is very cool, you and I have become masters of taking a look at different consolidation patterns inside of the market. Now, this is a 10-minute chart that you and I are taking a look at. The left-hand side of my screen happens to be the S&P futures contract. The right-hand side is the NASDAQ futures. Now, I'll blow this up on my screen out here. I don't know why, but I'm just going to. If we take a look at this little green box out here, that green box, in essence, beginning at about 2 o'clock, 2:30 yesterday afternoon, we can see that price drove right up into this high out here last night at about 10 o'clock. That was up at about the level of 1876. Then, and that was after the PBOC said, hey, we're going to flood the market with cash out there. The markets went higher. I don't remember exactly how high the Dow futures got. At one time I saw it was about 100, $1.25. Probably got a little bit higher than that. But then the market sold off. So from about 10 o'clock in the evening all the way down into the 2:30, 2:40 time frame, the market came right down here. And that really set the bar here for, in essence, a consolidation pattern, because we saw a nice little move up or retracement into about 3 o'clock in the morning, and then back down into the bottom of this level here, which inside the ES Mini, it's right around the 1836 level. So figure you go from 1836 up to a high of 1876. You've got 40 points. So it's a consolidation pattern. You know how this works better than I do. When you break a consolidation, it gives you a measured move that says that your move is going to be equal to or greater than that consolidation. As long as price stays above 1876 today, it doesn't have to do it before the end of the trading session or anything, before the 5:15 close of this contract. It doesn't have to do that. It can do it at any point in time. So we're not on a time watch here. What we are on is a watch of 1876. So we've seen a break of that trend line. We know there's a 40-point move associated with it as long as the ES Mini can stay above the 1876 level. Now, that 40 points could occur between now and the close. I saw somebody post something in the den earlier about how the DAX finished really strong going into the close of its session. Oftentimes, our markets can emulate the DAX. So that's one thing. Now, if in fact the ES Mini starts to give it up at any point in time, gets below 1876, stays below it, and what I mean by stays below it, tries to get back up and gets rejected and comes back down, you know what, folks? That sets up that price can move all the way back down to that 1836 level. That's not the pattern that is in play right now. But if you see that take place, that is what you would anticipate. You would either get a retracement or you get a move all the way back down to the bottom of that box. Now, inside the NQ, you've got the, so you're saying, so where's that going to take us to? Well, we just had 40 points to 1876. That's the number that you would be looking at inside of the ES Mini. Yeah, that would be the minimum number, because these consolidation breaks, the movement is equal to or greater than. Now, if we take a look at the NQ, same pattern. Price here, in essence, beginning the bottom of the consolidation box about 2 o'clock in the afternoon yesterday, run up into the 10 o'clock time frame up here, gets to a price level of 41.78, moves all the way down into the time frame here of about 2:30 this morning, gets down to a low of about 4,085. So that becomes your consolidation zone out here. We saw that price went ahead, tried to make a run and break out at 8:30 this morning, courtesy of Mario Draghi, or just simply whatever was going on in the market. Failed, moved all the way back to where? The bottom of that consolidation box. That was the ultimate buy for the day. We can see that price tried to break through, came back and tested it. Now, that's what you really like to see when you have a consolidation break. You like to see price get above it and then come back down and test that level to say, hey, I'm rejecting this and I'm staying above it. I think that is more about the NQ that will give us the message here. You can see right now as we're on the air at 1:13 in the afternoon, price is really just testing the top of that level. You say top of that level, it's right around 41.78. You got to give this just a little bit of room out here, but figure that 41.78 level is the make it or break it area. So we've got some consolidations that could really move these markets higher going into the close. They could also move them much lower coming into the close. So if you see price really get back in and stay in that consolidation level, that is what you would anticipate inside the market. Now, if we go over and let's graduate from a 10-minute chart into a 30-minute time frame chart here, and we'll have to do that when we get back from this break. But here's the NQ. This is why I say the NQ is really probably the secret sauce as to what the market wants to do, because it has been moving higher, doing it with less relative weakness, and as we came on the air, a bearish engulfing candle. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 227. Before we went to break, we were taking a look at the 30-minute chart here for the NQ. So the message really is going to come from the NQ, and we'll take a look at the ES-mini as well on the 30-minute chart. But you can see that what we have had here is we've had the price of the NASDAQ, the NQ futures contract, moving higher, doing it with less relative weakness out here. Now, that in itself is a potential problem. That is now a real hurdle that the market needs to overcome. We did get a bearish engulfing sign that took place here at 1 o'clock. We're seeing just a little bit of follow through to the downside, but not much. Now, the top of the TAS market profile, 4153, and that was really a market profile that was set up where bears should have been in control of the market. Why? Because that dashed blue line, the point of control, is closer to the top of that box out there, and so the level of support on any kind of pullback, getting back in that consolidation zone out there, ought to be the 4153 area. Likewise, if price can move higher, take that out. We just test that consolidation. We know we've got a large break to the upside. Now, inside the S&P futures contract for that 30-minute time frame, no such pattern exists out here. If anything, what the market's trying to do is create an A to B equals CD to the upside. That lightning bolt pattern here would take us into the price point of about 1908. Remember, we took a look at 1909.50, and I said that's going to be a significant level of resistance. Look, that A to B equals CD pattern on the 30-minute chart. If we do get that breakout, that's also going to be a 100% move. Get back to the highs out here from the trading day. Looks like, what is that, the 19th maybe? That is the 19th. At about 7 o'clock in the morning. So that would be the level where you would anticipate that the market would peter out. Now, that I don't believe is going to cover the entire 40-point move out there, but it's an area that you are going to want to pay attention to. Now, I mentioned gold here, making a Gartley buy pattern. Let's take a quick peek at that. Here's what that looks like. It's a Gartley pattern that's being threatened here. But if you take a look at, as gold made a nice high out here yesterday at about 1 o'clock in the afternoon, got to a seventh wave move. You know that we love those seventh inning stretch candles out here. And then price went ahead and made an A to B equals CD to the downside of 1-to-1. And it looks like it's about a 0.618 retracement as well. That's a Gartley buy. Nice little hammer candle that showed up. A bullish engulfing candle here at 12:30. The hammer candle at 11 o'clock. Looks like that level is under attack. If this area fails, we would anticipate prices move down to about the 1088 range out there. But until that pattern fails, the A to B equals CD is still in effect out here. If we take a look at what's going on, I mentioned, we love those patterns where price moves higher or lower with less relative strength or weakness. Let's take a look at what's actually going on inside the New York Stock Exchange. Been beat up for sure, has moved lower, it's busted out the lows from August out here. But take a look at what it's been doing here this week. Price has been moving lower, doing it with less relative weakness. Now, this candle session is not going to close until tomorrow at 4 o'clock. If it closed right here, right now, today, we've got A to B equals CD pattern out here. We've got a hammer candle that has shown up at the moment, only at the moment, and price has been moving lower with less relative weakness. What does that say? That says if, in fact, we see that bullish signal out here, the market is communicating to you and I that we're going to see a very large snapback rally out here. How large? Well, in the case of the New York Stock Exchange, you would just simply go back up to its swing points out here. That swing point taking it to the November 6th level, somewhere around 10,434, to 10,600, somewhere in that range, or some retracement thereof. But on a weekly basis, inside the New York Stock Exchange, looks pretty good so far. I don't know what the others. Let's see what the NASDAQ Composite looks like right now, just on a weekly basis. NASDAQ Composite, you've got a hammer candle. Joining the hammer candle out here from October the 2nd. On a weekly basis. That's what we're looking at, is some weekly charts out here. So you can see that the message of the markets is that it's really trying to hammer out that bottom, which may have taken place yesterday. If we look at the S&P 500, let's go see what we're doing here on a weekly basis. No bullish reversal signal, but what we're seeing here is a test of 3 different hammer candles. The one that takes us back on a weekly basis to October 17th. It's significant areas of major support. Of course, you and I know that when you see it close below a hammer candle, if you're long, you are wrong. But you've got a hammer candle back here from October 17th, 2014, August 28th, 2015, October 2nd, 2015 as well. So we can see that those hammers all have been tested, so far have held, and we may even get a weekly hammer candle inside the S&P 500 this time around as well. So we are seeing a little bit of that pullback back inside the consolidation level out there. That could spell trouble out here. But what we'll pay attention to, what will be the key as to whether price is going to move all the way back down to the bottom of that consolidation, is going to be what happens at the 41.53 level, about another 6 points to the downside out here. So we've covered what the markets are doing. We've covered gold just slightly, silver not so much, but that's okay. We'll take a look at gold. Let's look at what's going on inside of the let's look at the daily charts out here. Let's go take a look at the Qs. Let's take a look at the QQQ ETF. What do we know that it has done thus far? We know that yesterday, price came down and tested its TAS market profile, its weekly market profile, and held. That's priced out at $99.56 out here. A little bit of a bounce thus far. The level of resistance inside the Qs, let's anticipate that the market moves higher. The level of resistance inside the Qs is going to be 103.77. If the market moves lower, the level of support is going to be where? That's right. We talked about it. 99.56, our TAS market profile. The Qs don't really get out of the woodwork here until they clear both the August 24th high, and that is 102.53, and clear the TAS daily box of 103.77. So really, that's your range, 102.53, 103.77 out there that you'll be watching inside of the QQQ ETF. You've got volume of 38 million shares today. Yesterday down with 86 million. session. So this far into the session, a lightish type volume bounce out there, but that's really not the big deal. The big deal is going to be those consolidation levels that we took a look at in both the NQ and the ES. So question about oil. If we take a look at oil out here, I think I've got the chart on my screen. Here, this is a chart here. The top portion of the chart happens to be the Canadian dollar. It's got a great correlation to oil. The Mexican peso, that's the second panel. That also has a great correlation to oil. Then the third panel here is light sweet crude, and then you've got the S&P 500, which everybody talks about the correlation between it and light sweet crude, and I say they're on crack cocaine for the most part, but it's the story that they're telling everybody, and it's like any story that you might tell yourself. Eventually, you start to believe it out here. But we're seeing just a pickup here inside of the Canadian dollar. Same thing inside the Mexican peso. So light sweet crude does have a chance to at least form a short-term bottom out here, and that's what's going on with black gold, Texas tea. One of the things, folks, and we're going to have a guest on after we get back from this next break, but back in about, that we developed this relationship about 1.5 years ago with the folks from eSignal. And one of the things that I've been doing is creating relationships with some of the different vendors, the different partners with inside eSignal. And we come back from this break here. We're going to take a look at a algorithmic statistical arbitrage system put together by the guys at algo-lead.com. And that's what I've got on my system here right now. It's a very cool system. We'll explain all about it. I've been testing it out since about the middle of December. And there's going to be a workshop that eSignal is doing. It's on February 3rd. So that's coming up soon as well. You'll be able to check that out. But we'll be back with one of the founders of algolead.com. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 163. S&P is up 15. And before I went to the break, I mentioned during this segment here, we're going to spend time with the folks out at algolead.com and take a look at their statistical arbitrage system. But you are very familiar with what statistical arbitrage is. You and I do this all the time when we take a look at correlations between a couple different instruments, right? You and I, we take a look at the Euro-Japanese yen as an example in relation to what it's doing with regard to the S&P 500. We just took a look at the Canadian dollar, the Mexican peso, S&P 500 with regard to light sweet crude. And statistical arbitrage is really just taking two instruments at its simplest interpretation, two instruments, and identifying when things get out of whack. And when things get out of whack, one of those instruments is going to move back towards the other out here. So we're going to go right now to Boris Kozin, and Boris is one of the founders and creators of this heat map that you and I are taking a look at. Now, what's really cool about this is available to you and I. Typically, these types of systems are only available to large hedge funds. So, Boris, welcome to TFNN. Thanks so much for joining us this afternoon.
Thank you very much, Steve. Glad to be here, and I'm a big fan of your show.
Well, thank you. And I'm a big fan of your work out here, which has to do with a lot of different math. Help our listeners, our viewers, understand, the best ways. First, just give them some background about the heat map, how you guys developed it. And folks, I want to tell you, this is a day trading type system. Now, I've been testing it for the last 6 weeks. And when I say a day trading system, is before the market opens, I know which trades to take from the long side as well as the short side. And you take them both, and then just simply have to close them out by the end of the day. Now, that's in its rudest a way of being able to use it, but I can tell you I've had very good results in doing that. But, Boris, why don't you just share with listeners what you've developed, how they can take advantage of it, and so forth?
Yes, definitely, Steve. So the Algo Heat Map is a simple yet practical tool to help you visualize and quickly find stocks that have moved out of the expected range, as you say, out of whack.
And the universe of stocks that you're pulling from is from what?
The universe of stocks is pretty much the Russell 2000. So it's we look at all the stocks that have a $5 or higher price and are usually traded. And it's the whole universe within the Russell 2000. And it's, as you can see at the top of the heat map, there's multiple ways you can do filtering. You can filter by market cap and sectors.
Yes.
But the way, as you stated, let me explain the way we developed. My partner, Alex Teacham, he has pretty much was on the forefront of developing statistical arbitrage. He worked at since the 1980s at pretty much any firm that is well known with statistical arbitrage, such as Locata Group, the Blackhawk Caxton Group. He developed the trading system and the risk management for them. So he worked his way all the way up. So he was always on the forefront of statistical arbitrage development.
Which is cool. Yeah, very cool.
Yes. And so this software package utilizes very complex mathematics to not just do peer comparison, which is what you were saying between the yen and the U.S. We look at all type of analysis groups, such as we look at their peers, their industry, their close related industry. Then we move to the full sector and then the whole market. So let me just go quickly where the really cool aspects of it are. Companies such as GM would always react really well to its own industry group, which is automotive production.
Yes.
Also, it is closely related to energy because oil prices affect whether the trucks are being purchased or the economy cars are being purchased. And it's related to the banking industry because people need to finance their cars.
Sure.
So we are able to use factorization and match each one appropriately and how much each is related to all of its group, its peers, so GM and Ford versus GM, its industry group, the automotive industry, versus GM versus its related industry groups, which would be energy for the oil aspect and financing for the banking group. So when you're able to develop all of these large matrices, you get a very good sense of how different stocks are out of whack. In other words, are they overbought, oversold, compared to all of these groups together?
And your system is helping us to define what five different levels of out of whackness, so to speak, right? So maybe help people understand.
More than five. More than five, yeah.
Okay. So help people understand, as far as how to use this if they are going to, test this out. So there's a legend along the right-hand side for long.
Right.
It's color-coded, so it makes it very easy, as well as on the short side. And,
right.
So share with them how they would use it, how often this is changing and so forth.
Right. So this changes every 30 seconds based upon the real snapshot at the time. It uses the price so we can figure out based on the price how out of whack things are. So, for example, right now you see in yellow that WNR is the number one. If you could just do me a small favor and put your cursor over WNR. Yeah. And you'll see that it'll give you, and click on it, you'll see it'll give you a score.
Yes.
And that's the score that we represent. We're showing where it is within that group and how far, how far out of whack it is. So yellow is not a strong signal to buy. As you can see, we're getting a lot more stronger signals on the sell side.
Okay.
Based upon our out of whackness. So what clients do is they look at this chart. They can look at it any time during the day, and they see where the signals are. So based upon their understanding of that sector or the market, they should look at the stocks. Make sure that news is very important because this looks at price and correlations, so they should just really quickly check, is there any news that might affect the direction of it? So, for example, even though we do look at momentum, which is influenced by news effects, just recent and slight news might not be, might affect the price movement yet.
Sure.
Hey, people should take a look at the news, and then they can decide, do they feel comfortable with purchasing that stock for the long, shorting the stock for the short?
Right. Boris, stick with us here. We're going to be going to a break in a moment. And, folks, I want to tell you that at 9 o'clock this morning, the 5 stocks that showed up to take a long trade, Carnival Cruise Lines, DK, the ticker symbol, AWH, Barclays, VNO, Vornado. And when we come back, we'll take a look at how those have performed, as well as how you can take advantage of the Algo heat map. Steve Rhodes with TFNN. We've got the NASDAQ up 23. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 188, S&P's up 18, Composite is up about 29 points. I want to go back for a moment to those 30-minute charts that we were keeping an eye on. Really, the 10-minute charts as well. The 10-minute chart, actually, that we were keeping an eye on with regard to those consolidations. Now, we know that prices come back into the consolidation level out here, and you're going to see a couple different things on my screen. One, let me go ahead and just maybe go ahead and turn off the we're looking at the NQ right here. I'm focused on the NQ for you, and we can see that from the low of the bottom of that consolidation level to the high, that so far what the NQ has done is made the 0.382 retracement. If this level here holds, meaning the 4152 level could be setting up an A to B equals C pattern to the upside as well. They're now the new support. While we were on during that last segment, this is a 10-minute chart. There were some new market profiles that established themselves on the 30-minute basis, which really have somewhat of a bullish connotation. Now, in the case of the NQ, says price could pull back to 41.29, 41.27, but it ought to be able to find some good support there. So I just wanted to update you on what was going on there. Let's go back out to Boris Kazin. We're taking a look at the algo heat map. It's a feature function that's available inside the e-signal trading application. Also, by the way, folks, if you've got some interest in hearing more about this, there's going to be a workshop that's on February 3rd that is being presented through the eSignal platform. If you just go to the eSignal website and click on education and go to the drop down to webinars, you'll see that the second one that shows up here for February 3rd at 4:30 in the afternoon, you'll see trading ideas using the algo heat map out there. But of course, we've got our man Boris live with us. So Boris, if we take a look at the heat map right now, well, I mentioned to folks during the day, this is how I've been testing it out. But it's the same way that Boris had when Boris and I first got together on this. It was really a simple way. What was the easiest way that we could utilize this heat map in its most rudimentary way? And that was that by 9:30 in the morning, before the market opens, the heat map that we're taking a look at gives us our equities that have the best long opportunities, color codes them as well as from the short side. Now, what I did was I just carte blanche took the top 5 that showed up. Didn't matter whether they were a strong bullish signal or strong long signal or a weak a strong weak short signal out here. I just simply took the top 5, and that's what is inside this little watch list right here. So you can see Carnival Cruise Lines as an example from the bullish side. It's up $1 now. That's the chain. Yeah, it's up $1. Let me just go ahead and explode the box up here to make it a little bit easier. Delic, USA Holdings, Allied World. So each of these stocks here is to the upside, and that's using it in its most rudimentary way. You'll see that none of those stocks on the long side are at all in any of the color coding here. And if we use this with our market profiles as an example, they also help to give us signals. So Boris, help the folks to understand what should they anticipate as far as maybe best uses of the software. Again, it's intended to be used as a day trading type of vehicle. So why don't you share with them some of the best?
So exactly. So you took the simple methodology, but the way it's done is because stocks moved, and just like Carnival Cruise Line moved, it clearly moved enough to where it moved back to within its appropriate range to the whole peer calculation, and that's why it's no longer in the highest recommendation to purchase. So at that point, you made your profit. There's potentially no more movement. So if you're a day trader, you would just sell out and go to the next strongest signal.
Yes. And folks, the nice thing, one of the reasons why I started taking a look at it was, 2015, we had a flat year in the market. And what I wanted to do was say, hey, for our viewers, our listeners out there, how do we take advantage of even flat markets to be able to make some money? And, this is what I'm showing you on my screen right now. This is a comparison as to what just simply using this simple approach that I use, just taking the top. Now, in this case here, this was a test that was done taking the top 10 longs, the top 10 shorts, entering before, as the market opened, exiting as the market closed out here. And you can see, with the exception of the healthcare sector out here, just a simple outperformance of the entire market. For 2015, about a 15% return out there. So, it's a reason for you to want to go check out the workshop on the eSignal platform out there. Boris, anything else that you'd like to share with folks out here?
Yes, just wanted to let them know when you're trading, it's using the signals. It's just very important. I would recommend pick a sector that you're comfortable with. Pick a that you understand really well, because the news effects and how you understand the sectors are not embedded in the daily movement of the things, and those things do take away. We feel that if you use the program properly, not just purchasing at open and selling at close, but monitoring the news and everything, you would see a significant push to even further on the upside than what you just showed with the sectors, because the way we were testing it was sort of, is the tool producing valuable results? And yes, it is. And if you put, your own experience into it, you should really be pretty much hitting doubles, triples, and home runs, on a over the long term regularly.
Well, that sounds great. Well, I'm going to I'll feature this in the during my show each day. I'll probably post this inside the Tiger's Den, our little private area here for a bit, so they can so some of our traders in there can see the suggestions coming up inside the heat map, and we'll have you back on to take a look at it. So thanks so much for joining us here at TFNN, and folks, again, that workshop is going to be on February 3rd. Just go to the just go to the eSignal webpage or go to algo-heatmap.com, and you'll be able to check into that. So, Boris, have a great day, and thanks for coming
Thank you very much, and we're looking forward to speaking with you again. Thanks,
Sounds
Steve.
great. Sounds great.
Yeah.
So you got the Dow now up at 184. So we've taken a look at light sweet crude. We took a look at, that was a result. We had an email come in asking, if we thought that light sweet crude could bounce to $34. It's trading at $26. And, in the case of light sweet crude, if we take a look at just this little downtrend line out here, which I thought was going to hold, but light sweet crude has a mind of its own. So, it's not that it broke a trend, that's for sure. But the first level here that I would say that you'd be focused on in the case of light sweet crude is going to be $30.65. So the question was, can light sweet crude get up to $34 and possibly $37? And what you're going to want to pay attention to if you're trying to play this from the long side is the first level of resistance. Let's go ahead and get rid of the this trend line out here. We're just going to fall back to our TAS market profiles, our daily TAS market profiles. And as we look at that, is that the right contract? Did it change here? If it did, is it not 26.55? What's the current contract? H? So we switch over to March out here. We can switch over to March, just take a look at it. But let me see here. Give me a moment. Okay. Thank you. Thank you, Mr. Bill. So we'll let this populate. So 3173 is going to be the number that you're going to be wanting to pay attention to. And at 3173, that's where you're going to run right into the TAS market profile low. If price can get above that, then you're looking at about 33.92. And if you can get above that, then you've got your weekly market profile at 37 buckaroonies. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 144, S&P's up 13. A question that came in is, Steve, why is SVXY not moving up as much as the VIX is pulling back today? Here's the reason. Let's take a look at it. So if we take a let me just populate this screen right here. We'll take a look at what's going on with regard to the cash VIX index and then all the front month futures contracts out here. And you'll see that the VIX index down 98 cents today, up 3.5%. But if we take a look at the two front month contracts out here, the G contract, which is singing the key of G, February and March, those are the two contracts that are controlling the price movement of SVXY. That is the underlying instruments. It is not the cash VIX index. And what we can see here is you've got the SVXY. It's up 1%. Now that is, I think that's a double or a triple. I don't recall if that's a double. But in any event out here, it is not up from a percentage standpoint as much as the VIX cash index has pulled back. And the reason is because the underlying instrument is not the cash VIX index. That's not what it trades off of. What is inside that happens to be the two front, and it's like 60-30. I believe if you take a look at it, they're typically 60% of the front month, 30% of the month following, and then 10% is in cash out there. And so that's why you're not seeing that type of movement. Now, we know that, and take a look at those numbers, by the way. We've been talking about this little contango out here where the front month has been telling us that we're going to see some type of bounce in the market, bounce or bottom. Why? Because when you go out to all of the contracts, you go out to September here, it's trading at 23.15 versus where the cash index is trading to. We were just talking to Boris about statistical arbitrage when things get out of whack. That is what this is. You and I, we take a look at markets when they get out of whack here. We take a look at price relative strength divergent patterns. That's when a market gets out of whack. It moves in one direction too fast, too slow, or moves with less energy out there, and you got to be careful because that's when you can get that snapback rubber band that's going to hit you right into your, wherever that rubber band is pointed. So things are out of whack. So here's where we're going to find out, what's going to move. Is it going to be the futures contracts that move up to the price of the VIX, or is the VIX moving back to it? Maybe it's a combination of both out there. If we take a look at signals coming from the VIX, it's an absolutely great tool. If you learn how to use this from a trading standpoint, you don't have to trade it. You don't have to trade the volatility, but you want to understand what's going on with inside of it. Take a look at the VIX index itself. Here's a great, use for it. You can see that this thing has not been making higher highs as the market has been making lower lows. It's been making higher highs by like a penny or so. We're not going to worry about, and I'm looking at the close, by the way. So I'm sorry, when I say higher highs, I'm really referring to on this line chart here, and this is really, in my opinion, one of the best ways to use the VIX is look at the close of the session. Forget about the high and low. Now, if you do wave counts, things of that sort, different story. But when we take a look at where it actually closed, because at the end of the day, that's where you really come and you do the accounting, you figure out what happened during the end of the day. And end of day closes inside the VIX index, it's basically been flatlining out here. While the market, the S&P 500, because that's what the VIX is based off of, where we take a look at the S&P 500, it's been making lower lows. Now, when we have those types of out of whack divergences, arbitrage type tools out here, we know that things are going to come back into shape. So that means that we just simply go take a look at the S&P 500, right, to figure out what's going on with it. Now, this is a weekly chart out here. We don't have any kind of bullish reversal signal. If we take a look at the daily chart out here, what you got yesterday was what? What you got yesterday was you got a nice little hammer candle. That hammer candle, market hammering out a bottom, coming in as it was completed a 1 to 2, I believe A to B equals CD, to the downside out here. You can see that we now have a price relative strength divergent pattern that is showing up in it. You've got a what looks like a secondary bullish reversal signal today. Just tells it that the market is hammering out a bottom. Watch that 10-minute chart in the NQ and the ES. That'll be your guide for the day. Well, actually, David White, he's going to be your next guide for the day. Then Tom O'Brien and Andy Heck to bring it on home. Have a great Thursday, folks. Look forward to seeing you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.